Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 1st, 2018. As we head into the final half hour of trading, I feel that there's a need to do another update. I did a very brief update on the short-term outlook for the markets, just highlighting those key levels, really the same ones that I highlighted heading into last week, the end of last week. And I still think those levels are worth monitoring. I still think we're going to get a breakdown here soon. So far, a pretty nice reversal. The markets were up pretty nice today. The Nasdaq up 1 point, I believe, up over 1%, and a lot of those gains have already been faded. All day we've seen pressure in the small cap stocks. I'll get to that in a second. But again, let's keep an eye on this trend line. This goes back to, I believe it's late June. It's a multi-week plus trend line here, a couple months old already. And you have a divergent high right here, the most recent divergent high. Again, these are the ES S&P 500 E-mini futures looking at a 60-minute chart. So we need to watch that trend line for a break. It still appears to me that it's imminent. It's going to happen soon. And if we do, then watch these recent lows right here. Put the crosshairs there. It's about 2908 or so. So watch for a break there, and that'll put the SPY or the S&P 500 on the sell signal. Let's look at NQ for a second. Here's that same comparable trend line again off the late June lows, I believe it is. And same story. I've been harping on this one for a while. I know it's a lot of the same old, same old. We broke down a while ago. QQQ broke down and has been back testing from beneath. We had a little brief period where it got back above there but failed. So here it is. And I can drag this trend line, and I've done that. So you might have noticed in some videos I had it down here. Either way, it's the Qs are very volatile because a lot of tech stocks. So sometimes you have these little overshoots of the level, but you can see overall, again, if you look at all those circles, all these reactions along this area here, a lot of reactions there. Certainly respecting that trend line as we back test. And then again, more importantly, other than the back test, because those can go on for some time, as this one has, but you have this minor uptrend line right here. And as, excuse me, at this point, as I'm doing this video, we're testing that now. So we've seen a pretty good reversal so far today in NQ. It's gone negative now down here. You can see we've gone red for the day after being up over 1%. That's a pretty big turnaround. And let's look at a couple other things for you QQQ and SPY traders. So here it is on a 60-minute time frame, or we jump out to a 2-hour time frame, and there it is. So actually, I said late June. I stand corrected. This was the trend line off the early April lows right here. See on QQQ. And so you can see as we zoom in, let's just take it back to a 60-minute chart. Zooms in a little bit. Back testing, rolling over. And there's that same uptrend line I just showed you on NQ, except QQQ has already taken it out. Sometimes you'll see a little bit different because remember NQ trades around the clock, whereas QQQ is 9:30 to 4 p.m. trades. So there's a breakdown right there. Again, it comes after the divergent high. Let's take a look at SPY. And same story on SPY. Here's that longer term trend line, but this is the trend line on SPY I was referring to off the late June lows. Breakdown. We had an impulsive rejection there last week. Back tested it today. We popped above that 291.62 level, but we made a perfect back test of the trend line and failed. So we failed on the back test, and we've also fallen back below this level. This was resistance, so once taken out, that should become support, and it did for a little while, but we've smashed back through it. You can see the last candle we hit it, bounced off it, but now we're back down below there. That's not a good sign, but really until we take out 289.39. Still anybody's game, but again, everything I'm seeing in the longer term charts and what's concerning as well, concerning depending on how you're positioned, is IWM. I won't go into specifics. We have an active short trade on this. This is the only index that we're short on right now, and profitable. We timed this one pretty good so far. And the big levels here were those two trend lines right there, the white uptrend line and then that yellow benefit of the doubt trend line, I call it, that captures all those reaction lows. We're well below that now. Big red candle today took out those last, engulfed the previous two candles right there, those two green candles. And again, once we got below this 169.70 level, that was support. It acted as resistance, and so far now we're cracking below 166.44, which was the next support I had on here. So small caps are really coming under some selling pressure. Anything's possible, but again, you look at these divergent highs, and I've pointed this out in the past. This is, what makes me think that we're going to see more downside. And these are going back 2 years. We've had three divergent highs, including this one. Those other two, were sizable corrections. And so I think we still see some more downside here in IWM. And the only way IWM's getting down that far is if QQQ and SPY participate, at least to some extent. You're not going to see QQQ and SPY go on, take out the recent highs and continue to new highs. It is possible, and I've seen IWM correct while they either traded sideways or went up slightly. So I will say it's possible, but I think more likely we're going to see some more downside here, and you're going to start to see the SPY, the large caps, roll over soon. And finally, we'll just wrap it up with Midcaps. This is the Midcap ETF, MDY. It tracks the SPDRs S&P Midcap index. And you can see here we have, it's very similar. Of course, most of the index charts will usually look very similar, whether they're large, smaller, mid caps. But you have these two alternative trend lines. Again, the benefit of the doubt trend line being the lower of the two. It just captures a couple of these brief intraday spikes right there. So this was my primary trend line here, this uppermost trend line. That broke down. We had an impulsive red candle after that breakdown. There's that secondary or benefit of the doubt trend line, I call it. We bounced up and hit that. Now, of course, this is a longer term trend line. So again, you want to maybe give this one benefit of the doubt. How long term? Let's go back. That's 2 years. We have to go back to early 2016. So you can see there's a couple reactions there. And that yellow trend line comes in and captures. So that's where we're at right now. So we're very close to having some pretty decent sell signals on the U.S. equity markets, but as I just showed you, SPY or ES at least is above trend right now, that near-term trend line. Here's MDY catching a longer-term support line, so we can't say the nail's in the coffin yet, but we're getting there. And again, it's these divergences that indicate we're likely, even if we get another reaction, another bounce here, even if it takes us to new highs soon, these trend lines look ripe to break down sooner or later. So that's pretty much it. And maybe we'll just wrap it up here with the SPY daily chart. Keep this one short. This is one version I have here. Again, this is that trend line off the late June lows, or late June, the late June lows. And you can see the breakdown, the back test, a little more clear here on the daily time frame. Breakdown, red stick, back testing right now. But, yes, SPY is still up, and this is a back test. And as we just, as I just showed you on QQQ, you can back test for a while. So you want to watch for rejection. And again, like I showed earlier, undercut these recent lows, these 3 candles right here. I think that would be safe to say if you get a rejection off this trend line and then break those lows, we're going to come down here and test this trend line. And again, bigger picture has us from this point. And this was a scenario I laid out earlier in the year when we were back here. We went, we were bearish at both these highs, bullish at both these lows, posted on the site the odds for reversal, and also laid out at that time a scenario where the SPY, the markets would go on to make a new high above this high, put in a divergent high. It happened earlier in the NDX or QQQ. We already had that, and it's still continuing. We're still diverging there, and we now have that in the SPY. Now that we've taken out that January high, again, this is your divergence line with the indicators, the PPO and the RSI making lower highs, and of course that shows better on a weekly chart if you want to see it nice and clean. That's not the best board to look at it. I'm sure I can find one here. There it is. That's it. Just get rid of these trend lines here, move these away. And this shows you the divergence right there that we're looking at on the daily time frame. And I just need to add those lines down here. And what I'd like to see, and this is sort of a follow-up to the video I did this morning talking about the PPO as a various uses as trend indicator, as sniffing out divergences, and then one of the most simple uses of any momentum indicator like this with 2 lines is the bullish and bearish crossovers. So that will further strengthen the case for correction when we have a bearish crossover on the PPO, similar to what we had right here. That was the last time we had a bearish cross right there. We looked like we were going to here, and the lines bounced, tested. So once we had this bullish crossover, we had a successful back test, and at least by this one trend indicator, meaning when the blue line or the PPO line is above the signal line, the trend is bullish, as it was since then. Trend was bearish at this point and bullish from here to here. You had some whipsaws right here, but you can see, like I said earlier in the video today, I like to see clean separation like this. And sometimes, like always, you get some false signals. I mean that there was some downside and some sideways trading there, but again, this is what I really like to see. I like to see this clean separation like we have here. So those are the things I'm looking for. And again, most important would be the price support levels. And this will follow. This is a weekly chart, so you probably won't get this until the SPY is probably down, 3, 4, 5% from where we're at. Again, if the correction is going to happen this week, and if not, um, the posture these indicators show us that we'll probably get that within the next few weeks here. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.